Hello traders, Cousin Vinny coming to you from theclosingprint.com on October 20th, 2019. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week while seeing profit taking on Friday. With the exception of the London Stock Exchange, all of the major international indices were also higher. In addition, all of the big cap tech names that we follow moved higher with the exception of Netflix, Microsoft, and Intel showing weekly gains. The bond stock ratio is bullish. We have high yield and junk bonds bullish. The Dow Composite is neutral, and the S&P 1500 is on a buy signal. It's bullish, along with the ARCA Institutional Index. Most of our indicators are either neutral or slightly more bullish than bearish going into the week. Skew is rising. It's at 128. US dollar dropped from the highs precipitously last week down to the 200 period moving average, so we're watching that. On the other side of the Atlantic, we saw the British pound with the largest bullish thrust that we've seen in many years, with the potential Brexit going into effect in the short term. Bonds appear to be in a rebalancing condition at the present time, so if you have bonds, keep an eye on them. We might reduce our bond exposure in the next few weeks if bonds do start to pull back in, while the 10-year yield is bullish for equities as it continues to rise. Gold has been in a descending channel for the last few weeks. It looks like that's going to continue as well as the fear trade and safety trade that we saw in the US dollar and gold is starting to dissipate. Copper is bullish. We saw a very nice gain last week. We're still inside that descending wedge. That'll probably break out. We also have West Texas crude in about a 26-week range. It's still at the lower end of that range. The heat map is improving, turning more into the lime greens and greens. And we saw international markets also improving with Greece, many of the European countries, Asia, Russia, and South America all improving, with Turkey the outlier for obvious reasons. That one is selling off a bit more. We'll look at some IBD 50 names that look really good this week. In addition, we'll look at some MarketSmith Growth 250 and stocks that are showing above average volume in green, with Bukowski showing 5 of 5 green on his indicators, with CPI green since October the 9th at 60.5%. That's neutral, moving off of a 98% reading last week. That's normal. We have 17 bearish patterns, 26 bullish patterns, and 245 patterns waiting for breakout. The numbers in parentheses, again, are the previous week's numbers, so we can reference the changes each week. Bottom line, there is still headline risk, though things are starting to look a little bit more rosy, with Brexit potentially, an orderly exit from the EU, and it looks like we might get a signature between President Xi and President Trump in the middle of November at their next meeting. Therefore, we're watching how the markets open on Monday with the stocks that we'll be watching this week. Starting off with the S&P 1500, high-low percent. This looks at the 1,500 stocks in this index. The S&P 500, S&P 400 mid-caps, and S&P 600 small caps. The reason why we watch this index very closely, number one, it's a broad measure of market participation, and number two, there are no ADRs like we see on the New York Stock Exchange. That tends to skew our data, so we do check both, but the S&P 1500 is what we pay attention to very closely. We can see the number of stocks trading higher. The high-low percent is above the zero line on the histogram, and we have a green signal on the index. Price action, while pulling back on Friday, made a nice gain off of the 20-period moving average. Now we do have the highs overhead to deal with, but the cycles are moving off of oversold conditions, as you can see. Previously, back in mid-September, we hit the highs and got rejected, but look where the cycle was at that time. In this particular case, we are moving off of oversold again. The rate of change is rising. The chances that we break above this level are a bit greater, as long as nothing changes in the short term. So my initial thought is that we break out from these higher levels, we come back and test the breakout zone if we do at all. So that's my thesis in the short term, so we'll have to look for confirmation over the next few days. We also see the same thing on the Wilshire 5000, a broad measure of market participation, 5,000 stocks. Oversold conditions, we started to transition into longs at this point, looking for a reversal off of these hammers, wiki candles, and reversal situations as the markets continue to move higher. The same idea here. We hit this peak, but we're overbought in the red zone. Now we're coming off of oversold and moving higher. The likelihood that we break a trend line through this area first, as we have momentum bullish and the cycle fresh, is higher than it was here in September when we were overbought. In addition, because of that Friday sell-off, we did see growth versus value in the upper panel trailing off. That's telling you the growth stocks, the big cap tech names, were underperforming value names like the Dow Industrials. Here's the growth index, IGX, versus value, IVX. You can see the outperformance here. So keep an eye on this chart or growth and value stocks this week. You might have a better opportunity with value, as they might break out first and then growth follows through and chases value if people start buying stocks into the seasonally strongest months of the year. This chart of NOBL, the Dividend Aristocrats ETF, is a reflection of value. You can see how this continues to trend higher and most likely will break out this week if the trend persists. So, with growth being focused on the NASDAQ 100, it's no surprise that we did see this shooting star on the weekly time frame. We are still in an ascending wedge pattern with potential to push higher. We'd just like to see MACD turn back up. That's a function of price, of course, and volume to increase as well. This week, look for a test of this upper trend line or a pullback and a test of the moving average. Here is the Russell 2000 ETF Iwm. Very clean looking chart for the most part in a sideways range with support right around 145. RSI been hovering or oscillating around the 50 zone with potential over the last 3 weeks, having seen buyers step up each week at the lows. Last week we closed above the moving average, in this case the 50 on the weekly time frame. If we can get above the 158 to 160 zone, that would give us an opportunity for a breakout trade in small caps. Do note that there are a lot of small cap energy, oil and gas, and equipment names, as well as biotech stocks in this index. If those two sectors start to move higher, look for IWM to perform as well. We'd like to see all of the indices moving higher this week as a bullish cycle continues, something that is reflected in the NAMO and NIMO McClellan oscillators for the NASDAQ and the New York Stock Exchange respectively. We can see the black line is starting to turn and bottom, with the summation index for both the NASI and the NYSE crossing over in a bullish direction. The likelihood is we could either do a little wiggle like we did back here in August, or just cross over entirely like we did back in June and continue this current uptrend that we started 2 weeks ago. as we can also see in the NYMO, the McClellan oscillator for the New York Stock Exchange. Clearly, we are near a bottom, not a peak like we were in the middle of September. The likelihood is that if we can see a bit more buying into the seasonally strongest months of the year for fund managers, then we could see a retest of these highs and potentially a breakout because we just started this current trend and bullish cycle. That said, the current cycle is bullish. However, there's always the caveat that fear could grip the markets for whatever reason. Something could hit us that we are unaware of, out of left field. With that in mind, we do see VIX at a low that we saw back in the middle of September. Considering the cycles, do we spike higher or do we continue lower down into the red zone? If we get down into the red zone and we're at a peak, then we would be more concerned. At the present time, VIX is appearing to be in a neutral zone. It could go in either direction. So we'll have to keep an eye on VIX and fear, as we always do during the live sessions. Compounding the bullish data, which would have the bears more concerned, is the number of stocks making new highs minus new lows, a very simple calculation. We continue to see the moving average rising. That's what we were looking for last week in the weekend video. We wanted to see confirmation. We now have it as price action rises above the 130 moving average. That's half a year of data. And we see green elder sticks in addition to the New York Stock Exchange advanced decline moving higher. So there are more advancing stocks than declining stocks and more new highs than new lows. Therefore, if we continue to see this acceleration into the seasonally strongest months of the year, we should see higher prices in the indices, with the caveat that we could see a spike in fear, of course, over perhaps some more comments about China-US tariffs or whatever is out there that we don't currently have to factor in. Here is the total put-call ratio. Back on October 1st, we got a spike above the upper Bollinger Bands like we did back in late May. That led to a rally in the markets from May into July, the peak, when we dropped off into August, the seasonally weakest month of the year. We now have a situation where we 3 weeks ago hit the upper bands, exceeded, and we reversed similar to late May. We are rising now, and we have the put-call ratio also accelerating back to the upside, lending us a more bullish scenario in the short term than bearish, as we could see with the equity-only put-call ratio exceeding the levels we saw back in August as well. So people are fearful that that Friday sell-off could accelerate lower. We'll have to keep an eye on the put-call ratio, but these are usually pretty good indications on what the markets are going to do in the short term, as we can clearly see. Looking at the major indices, we can see transports, utilities outperformed. In addition, the sectors that outperformed last week, consumer staples, financials, banks, utilities, and real estate, going into this week, we'll be watching for strength in these groups. The banks in particular did very well, considering the sell-off that we saw, and broker-dealers, in addition to gold. Gold is still in that descending channel, but looking better. International markets, we saw these countries doing well: Austria, Belgium, Brazil, Germany, and India. So try to position accordingly. Bonds also saw some strength in yields as the bond markets pulled back. We saw the 10-year yield higher low, looking like it's going to trend back towards the 2% range in the short term, which would be bullish for equities. Commodities, we did see strength in copper, a leading economic indicator, and of course gold moved a bit lower. Currencies saw the US dollar pulling back while the British pound moved higher, and most currencies opposite the US dollar rallied last week. and market breadth has been improving going into this week. The bond stock ratio in the bottom panel is more bullish for equities in the short term as this red line continues to move lower. As we can see with the TLT 20-year Treasury bond on the weekly time frame, we got long last year this time in October. We've had a 12-month rally that appears to be dissipating, rebalancing. Portfolios, fund managers appear to be taking that cash, more than likely going to put it to work in equities into the seasonally strongest months of the year. As TLT begins to drop off, more and more people in this crowded trade will try to exit. So we could see gap downs in price on TLT and other bond instruments. As we can also see in AGG, the Barclays Aggregate Bond Fund. This is what bond managers use as their benchmark. Looks like we could be rebalancing on this bond instrument as well. MACD is crossing, as you can see, and stochastic is making a lower high. As price action hangs out at this level, we're thinking that AGG is probably going to lose the moving averages here and start to roll over. This is a very overcrowded trade. Institutions have held it up there long enough for them to get out. So more than likely we'll reduce our exposure to bonds in the short term. Higher yield corporate debt is also moving higher, HYG, along with junk bonds, which looks very similar. In an uptrend, bullish, looking for a follow through and a breakout. If you are bullish equities, you want to see this moving higher. This is directly related to credit spreads. Investors see less risk in credit defaults, as we saw back in December and also back in 2016 when this market moved higher. I told you bond investors were concerned about debt defaults and why you saw this sell-off back in late 2018, as high yield corporate debt and junk bond assets will tend to lead the markets lower. We look for these signals. Currently, this is more bullish than bearish. We also see that in the 10-year. If the 10-year continues to rally higher over the coming weeks, it'll be similar circumstances that we saw back in 2012 with the European debt crisis as it applied to Greece and the EU, and the Asian commodity crisis that we saw back in 2016, which led to bullish and better things to come in the markets as a whole. Talking about currencies now, the British pound US dollar rallied sharply last week, which is putting pressure on the London Stock Exchange and the FTSE. So if you're trading stocks over in London, be aware that we could see the London Stock Exchange pull back some. Same goes for the FTSE if the British pound continues to rally. We've been in a nice bullish trend for much of the year. As you can see, we're starting to consolidate here in the lower part of the range. So if we start to lose this, the moving averages will follow, of course, and you could see some downside, maybe a 382 Fibonacci retracement before the markets are able to move higher. So just be aware of it going forward. As the dollar waterfalled lower through the 50-day and down to the 200-day to end the week, which is bullish for equities. That'll create a short-term tailwind if this continues lower, with MACD and stochastic suggesting oversold, while we're sitting right on the 200 period moving average. Adding to the bullish case, we have the opportunity for copper, a leading economic indicator of sorts. If it does break higher this week, gets above this trend line and this volume by price resistance level overhead, that could portend even higher prices for home builders, construction, and related names, materials, stocks that have been in a bullish trend lately could see higher levels. So watch copper very closely this week. Pay attention to it. Keep an eye on futures, as higher would be bullish for equities, lower back in this descending wedge would be bearish for the economy in the short term. We also saw gold moving lower. This could also have to do with a lack of fear in the markets. People were on vacation and the markets were worried about tariffs. We saw the gold trade in this bullish trend. Now we're seeing consolidation of that run up during the summer. So for the time being, we are a little bit more bearish on gold than bullish going into the last 2 weeks of October. And finally, if you're bullish equities, you'd like to see crude oil moving higher out of this 26-week range. So we're looking for a push off of the lower part of this range. That would give us something of a tailwind for the most part if everything lines up with gold and the US dollar and equities and bonds in general. So watch crude as well. That would help if it does move higher this week. And would be bearish for equities if we saw a sharp sell-off in energy. The sector heat map is improving. We're seeing a lot more lime greens and greens. We have strength in staples, financials. The banks did well last week. Utilities and real estate. We're looking for improvement in banks and broker dealers along with the other sectors. International markets saw improvement as well across the board with the exception of Turkey, which did take something of a hit last week. Most of the European countries, Asia, as well as Russia, all improved last week, so keep that in mind as you trade this week. If you're thinking about positioning in some areas like Austria, Belgium, and Brazil all did well. Germany improved, and India to end the week. Here is the IBD 50 ranked by performance. You can see about 20 stocks were green and the majority were red to end the week on Friday. But the week as a whole was actually pretty bullish. It was just Friday that gave us the reason to be a little bit concerned or think that people were just taking profits towards the end of the week. That said, we'd like to see price action above the ascending 21-day moving average, not below like last week. We did have one of our members, Brian Flood, I believe, was short on Adobe, which was the right trade. Considering rejection at an overhead moving average, we did have a nice little pullback in Adobe. If you're bullish, you don't want to be looking for this kind of setup. You'd rather be looking at stocks like Comcast, which moved above their 20-period moving average, retest the 9 EMA last week. MACD is above its signal line, and we have RSI above 50. Not my favorite setup, but other stocks like Chipotle do look good. Sideways range, RSI's higher. We did see really nice volume on Friday. MACD is above its signal line. This could accelerate. Look for a follow through on Monday. We also saw Copart looking like this is going to push off the 21-day moving average. RSI above 50, above average volume. Volume always precedes price, so look for a follow through in these three stocks. In addition to Care Trust REIT, CTRE, following through, pushing off of a mildly bullish trending 21-day. 2 bullish days, maybe we get a bullish third day. Break above this pivot. It's probably going to be a little bit of resistance here. If it can get through these pivots, we could see higher prices. REITs outperformed last week as we presented previously. CTRE has MACD above its signal line. I'd like to see more volume. RSI is already above 50 and rising. Edwards Life Sciences looks like it's going to break higher this week. Watch MACD and volume. Also keep an eye on your earnings dates. A lot of stocks are reporting over the next week or two, so you want to be mindful of that. I don't want to take a stock except for day trades that we present here if earnings are within the next couple of days. We'll cover that in the watch list later. Another REIT, EPRT, breaking out, most likely going to follow through this week with MACD above its signal line and RSI at overbought conditions. Look for a little flag, maybe a move back to the 9 EMA and a pop higher. This is bullish and most likely will continue higher. In mode, we're looking for this one to follow through this week. take out these highs. In the short term, buyers did step up at the 9 EMA for the third day in a row. Price action hasn't been able to push off of this yet, but MACD is starting to cross above and stay above its signal line. So watch that this week on in mode. I still like JCOM. Maybe it comes back to this breakout level, pull back to breakout, test the 21 day. If we do get a test of that this week, we might consider a trade on J2 Global. Banks, as discussed when we looked at sectors, are outperforming last week. This could be the quarter where banks finally do break out to new highs. JP Morgan already at 52-week highs, looking for a follow-through. Volume is increasing. I'd like it better if it pulled back to the 9 EMA first, held, and we saw buyers step up. We also looked at Bank of America and Goldman Sachs. Those looked pretty good last week. Retail has been doing very well. We had Lulu pull back to the 21 day and then break higher. This was a trade we looked at last week. That worked very well. MACD's above its signal line. Volume shows institutions have been picking up shares, and RSI still has a little bit room to run. Maybe a day trade. I'd like for a little pullback first and then a follow through. Lululemon looks like it's just going to continue into the seasonally strongest months of the year. Maztec, MTZ, we talked about this one live during the week. This followed through very nicely. MACD above its signal line, volume increasing, RSI rising, price above both the 9 and the 20. 9 is starting to go more vertical. Look for a little pullback, but most likely this is going to continue to trend higher if you took it last week or the week before on this break of this trend line. Banks again, Pacific Premier Bancorp, PPBI. Looks like this is going to continue higher. MACD's crossing. Restoration Hardware, RH, very nice trend. When it comes back to the 21 day, keep an eye on it. This is the second time since it broke higher in June that it's pulled back to the 21 day. This will probably be the third time. If it does pull back, that'll be a nice setup going into the week. This was a flat base breakout, 3 weeks tight, a bit overbought, so I'm waiting for this to pull back a little bit more. Buyers did step up on Friday at the low of the day, however. Rexford, another REIT that continues to push higher. The real estate group did outperform last week again, following through. MACD cross, volume coming in, RSI overbought. Looking for a little pullback to the 90 EMA for a setup. It most likely will just continue to rise after that. Here is Store Capital. Looking for a follow through and a breakout. Draw a trend line through this high and this pivot. A break above that level would probably lead to better things on Store Capital. RSI is above 50. That would turn up as a function of price, and MACD would as well. Watch for volume. Store Capital and the REITs looking for another week of outperformance. Timken, just below this pivot, a break above that pivot would give you another shot at the 50 zone. So look for that in the near term. Just double check earnings dates as all of these stocks are reporting in the short term. OLED, looking for these buyers that stepped up late on Friday to propel this higher this week. MACD's above its signal line, RSI is rising. A little flat there underneath the 50 area, but if this starts to follow through, you get a bullish day on Monday. This could lead to higher prices and a test of this level overhead at 189.87, this pivot right here, and this support level that was lost just overhead at 195. Software stocks saw a little weakness on Friday. Upland, I'm thinking, is going to continue to move higher. These little pullbacks give you an opportunity. Buyers stepped up. Pretty evident. RSI needs to stay above 50. We see a bullish day on Monday that doesn't take out this wiki low or the 21 day. We could be setting up for a move back up to 44 in the short term. Here are some stocks that are showing relative strength and above average volume. Watch for AT&T to continue higher. Make sure you exit before earnings. Additional stocks that showed relative strength last week. Costco continues to move higher. RS line is rising. Earnings are already out of the way. Reporting a beat, 14%. Volume picked up. Price action moved higher. You know we've been long this one since the break of this little channel 3 weeks ago. continues to rally. Annual sales and earnings almost $10 per share. Amazing company, expanding into other markets now in Asia and Japan. CZZ, Kosan, Brazilian company that distributes and produces gasoline, ethanol, diesel, fuel, and oil to service stations. Looking for a breakout at some point. Annual sales and earnings continue to increase into 2020 projected, and some really nice looking IBD numbers. So watch for CZZ to follow through with earnings in the second week of November. First Energy looking like this might break out as well, with earnings in 10 days, annual sales and earnings climbing, and good IBD metrics. Gentex Corporation manufactures automatic dimming rearview mirrors, electronics, garage door openers for the automotive industry. This showed up on the MarketSmith Blue Dot Scan, stocks that are set up with relative strength line climbing, ready to break out. So a long ways away, having reported the beat of 5%, above average volume on Friday, relative strength versus the markets. We're watching Home Depot for an earnings run, 30 days to go, with annual sales and earnings climbing, good IBD metrics. Stock continues to press higher to 52-week highs. Ship Finance International, SFL, provides tanker transportation services for crude, refined oil products, dry bulk, and containerized cargoes. Annual sales and earnings look good. Decent IBD metrics, could be better. We saw this on the MarketSmith Blue Dot Scan. Looking for a breakout above the 15 zone in the short term. The blue area is the buy zone. All of the stocks in the opening monologue in green are above average volume candidates. Make sure you check these out as well. Most of these stocks have greater than 100% increase in volume. Nuwan Communications, as an example, continues to push higher. Good annual sales and earnings. The IBD metrics could be a little bit better, but we do have price action breaking out of a big base. Look for a follow through this week. Above average volume noted. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on October 20th, 2019. And finally, make sure you check out Chris Shavako's short takes video this week. I think you'll find it very enlightening, specifically this week related to millennials and the baby boom generation, with reference to where the markets might be headed in the long term. In addition, we'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast, so be sure to look for that in your inbox. I hope this helps. Take care, and we'll talk to you soon.